Welcome to today's event where we have the pleasure to present Össur. To help us through today's presentation, we are joined by you, Sven Silverson, CEO and President of Össur. Today's event will cover the Q3 report, fresh from the press this morning. We will also do a little bit background presentation of the company and your new targets, so we get a better understanding of the figures you will present here, especially if someone is new or someone hasn't looked at your company for a while, because I was surprised as an analyst covering you a couple of years ago and how you look now. A lot has happened, so I think for the figures to make sense, you will do also a short introduction to a company and your latest development. As always, it's possible to ask questions in the box down below. Do it in Danish or English. We do this in English, but I will try and translate the best of my ability the Danish question. But I think for now, I will hand the call over to you, Sven.
Thank you very much, Michael, and thanks for having us here today. Happy to be here and happy to participate. What I plan to do is to go through a few slides and explain a little bit how the company looks like today and what our objectives are, what our strategic priorities are, and then we can dive a little bit into the numbers. So Össur is, I would say, a mid-sized global medical device business. We operate in about 40 countries today. We have about 4,000 employees, mostly in the well-developed healthcare markets, where you have an established reimbursement system, as most of what we do is ultimately paid for by a private or public payment system. We're listed on the Nasdaq Stock Exchange in Copenhagen and have been there since 2009. We are a technology business. We are an innovation-driven business. We invest about 5% of our sales every year in research and development, about $30 million. We have about 2,000 patents with regards to how devices are fitted to the external body, if you will, and have one of the biggest intellectual property portfolios in the mobility industry today. The company has always grown, and it's been a very healthy combination of both organic growth and acquisitive growth. And since the company was listed initially here in Iceland on the stock exchange in 1999, the company has grown on average 17% per year. And this has been a healthy growth, meaning that throughout this period, the company has always been profitable and one of the, let's say, specifics of the investment case as such is that we don't have a lot of fixed assets. Our assets are our people, our intellectual property, our relationships, and most of the operating profit is usually turned into a healthy cash flow. Sustainability has always been and continues to be, and even more so in this day and age, a key topic for us. Our biggest impact is obviously that we create devices and offer services to individuals that have an impaired level of mobility, and our biggest contribution is obviously that we improve mobility levels, but have ambitious goals for other sustainability matters. Briefly on our business segments, prosthetics, it's our biggest segment. This is we offer and manufacture, let's say, components that are needed to build prosthetic legs and arms and mechanical fingers now as well, with our recent acquisition of Naked Prosthetics last year. We have manufactured all the components that are needed to build a prosthetic leg. And again, it's important to remember that for our prosthetics business and our patient care business, which you see on the bottom of this slide here, this is serving a chronic condition where those that need these types of services will need them for the rest of their lives. And most of our activities every year are related to maintaining existing mobility devices that are already out there. Then you see in the middle, we have our bracing and support business. On the bracing and support side, we are serving a fundamental need in each and every healthcare system. These are let's say, external products, again, that are fitted to solve joint problems with joints or minor muscle problems or minor fractures. And this is a one-time use as such, and this represents about 20% of our business. I said earlier that the business has always grown. This is our growth profile, again, since the company was listed in 1999. And this has been a healthy combination of both organic growth and and external growth. And as with all companies, we've gone through different maturity stages. In the early part of this period, it was all about building a portfolio, building a presence as a product business, sort of scaling the business both from a product standpoint and from a geographical standpoint. Over the last 10 years, we've also taken a step to also serve the people that use our products, meaning owning companies that also serve patients. And we do that now in most of our established markets. What is also a very important component, and this we talked about at our Capital Markets Day earlier in the year, where we are in some shape or form transitioning from being what has been a very product-focused business operating in these product segments of prosthetics, bracing, and with a growing presence in clinics, to looking at our playing field as the whole value chain and addressing chronic mobility in a bigger context. This is how we look at the business today. And what that means is that we are, in everything we do, need to be more patient-centric, because at the end of the day, we serve a population that consistently needs to upgrade, maintain, and renew their mobility devices. Michael, you mentioned earlier our new targets in relation to our recently sort of communicated strategy, which we refer to as our Growth 27 plan, which is a 5-year plan. We are striving for accelerating our organic growth rate, which has been more in the region historically pre-COVID, around 4 to 5%. We are striving for 5 to 7% organic growth rates, and in addition, 2 to 3% growth from growing through acquisitions, both by acquiring technology that's complementary or product that's complementary to our distribution setup, and also looking at further acquisition opportunities of patient care facilities, strengthening our ability to operate in the whole value chain. So this was the, let's say, the overview, very brief overview. Hopefully that has created a little bit of understanding of what we are as a business and what we are striving for every day. Now, just a few highlights here from the quarter. Very solid organic growth rates, 7% organic growth rate, 9% organic growth if we look at just the year-to-date figures. We are growing very well, especially in our prosthetics business, 12% organic growth rate. Also strong growth in patient care, a little bit softer quarter in bracing and support. And when we look at our regions, strong growth in our big regions, Americas and EMEA, but we report a decline in APAC, which is mainly due to, if we look at what happened last year, our business in China, which is a big part of our APAC business, was basically closed in Q2 due to COVID, but now and all the pent-up demand was released in Q3 last year, so we're comparing to that. So it's still a very healthy development for this market area for us.
And exactly, Sven, I think a lot of investors are thinking about how much of this growth this year is pent-up demand, how much, from the COVID, people getting back. You also, I think in your reporting, talking a lot about traffic and the product numbers going up. So I think that there must be some effect. Do you feel how much, and is it not a catch-up effect, but actually some effect that might also go into the coming years? So how are the feelings about that?
Yeah, it's good to address this. There is certainly, if we look at this year, our growth in prosthetics has been very, very strong, about 14% organic growth rate year to date. That is partly, we believe, related to some demand that was not realized in the last couple of years with the COVID disruption in healthcare systems in general, with just lack of hospital staffing, etc. So we believe that there is an element of pent-up demand. But what is also important to zoom in on is that we've had good progress with our bionic solutions. And I did not mention that earlier in the high-level overview. When it comes to growth in prosthetics, it is first and foremost about getting more people to use higher quality prosthetics. Bionics are typically products that have some sort of sensoring capability, some even motorized power now with our latest Power Knee, which is the only powered prosthesis that is in the market today, where Össur is a pioneer of powered prosthetics. It's about getting more people using these types of devices, because when people use good mobility devices, all else equal, they are more mobile, they are healthier. Therefore, it's a good investment for each and every healthcare system to pay for these solutions, even though they are more expensive. But to answer your question specifically, yes, there is some element of pent-up demand, but how much exactly is hard to put a finger on that.
Yeah, so and maybe getting back a little bit to maybe not this report, also get a feel of is this a market taken well care of? You know, do you get treated well even in our systems? Are everybody upgraded to the higher systems, or is there a lot of you to be able to increase, not if patients don't increase, but actually increase the value of the sales you make?
Yes, I mean, and this varies a lot between the different markets that we operate in. We see markets like Germany, where you have a very well-structured reimbursement system that allows for a very broad access to good devices, good prosthetic devices. Then you have other markets where the utilization is very, very low, and these are what we generally considered mature healthcare system. So there's plenty of work for us to do, I would say, in influencing payers and fighting for more access for more amputees for these types of products, because the health economics are very, very solid. And it doesn't take more convincing than to just watch someone walk that is using a proper prosthetic device. They will walk like you will hardly notice that they are missing a limb, which means that they are more mobile, and it means that they will have less likelihood of falling and less other types of expensive healthcare problems. And there's very strong statistics, for example, around those individuals that use these high-end products. They are much less likely to fall. And a very big part of the amputee population are elderly people, and when they fall and injure themselves, that leads to hospitalizations. That is one of the biggest cost items for healthcare system today when it comes to treating amputees. So again, a little bit long answer to your question, but
yeah,
yes,
no, but it's fine to get a feel of, you know, that it's not only the pent-up demand that is driving it. You have the possibility to pull the levers that if you can increase the value or the technology in what you deliver, you can also increase growth that way. Perfect. You can go on with the results.
Sure. So strong top line operationally, our profitability is stable when we compare to the same period last year. There are some things, as always, that are working with us. There are some things that are working against us. What is working with us is strong, let's say, organic growth for our prosthetics division. We are seeing much lower freight cost than in the comparable period last year. However, we are scaling some of these concepts that have been successful for us in the last couple of years, where we need more capacity to deliver on our full leg solution. This is where we are offering our clinical customers to outsource part of the fabrication to us, meaning that we are able to sell, let's say, complete legs. This has been a very big part of our strategy over the last years, and we're scaling this initiative. However, we're still working through some of the complexities around this supply chain disruption that we've seen in the last couple of years in terms of getting back to pre-COVID productivity levels. And also worth mentioning that in some of our markets where we are doing patient care, reimbursement rates have not followed exactly the development and underlying inflation, which has put a little bit pressure on our margins. But all in all, we're stable profitability in a quite a challenging cost environment, which all else equal is a defensive victory in some shape or form. Cash flow was good in the quarter. CapEx a little bit above normalized level as we were scaling our facility as I mentioned earlier, around the complete leg setup and a little bit of upgrading some of our key locations. But we are now back to our, let's say, where we want to be within our leverage range of 2 to 3 times. But we've also said that we can temporarily be above this range if the right acquisition opportunities come along.
And actually, there is a couple of questions, to your share buyback or dividend, and regarding this, there's with higher interest. Do we want to go bottom of the debt range before you start a buyback program? And there's also someone asking if it goes so well, why no dividends or share buyback? So a little bit thoughts about your distribution to shareholders, which has been paused a little bit, and looking at it forward.
Yes, what we have said about the capital allocation is that our preference is to make acquisitions that strengthen our business. Acquisitions that were, for example, a great example was last year's acquisition of a company called Naked Prosthetics that has mechanical finger prosthesis, which was a relatively small company with a great product, unique product, but lack of distribution power in a global context. This is a great example where we've been able to acquire technology, intellectual property, a strong product portfolio where we can leverage our access to market. And there are a few other opportunities like that, and a few other opportunities when it comes to strengthening our ability to serve patients in our key markets. So our preference will be to make acquisitions when they strengthen our business and are accretive for both our let's say return on invested capital. However, we are currently at the upper end of our range. So at each point in time, we will evaluate our M&A pipeline and with regards to restarting the share buyback programs. We prefer share buyback program over, let's say, a fixed cash dividends, just from the share standpoint of more flexibility, and that we are in a market that is consolidating and where we do have opportunities for further investments.
So there's nothing that we could follow, that the target zone doesn't need to go down to 2 and you have a lot of room. It is also something to do with your M&A pipeline and
yes,
the sea of possibilities.
Yes, but all else equal, the further we move down in the range, the more likely it is for us to restart the share buyback program.
Perfect.
Yeah.
Thank you for the answer.
Sure. Just a little bit more here. You have the overview of the segments. I've said most of the key points here. Strong performance on both segments and geographic segments, and profit growing year over year in absolute terms. It's important to highlight some of the big picture trends as well. Looking at the left side of this graph here, you see growth coming down a little bit here in Q3 over Q2, mainly because we have stronger comparison from prior years. So we still expect the main trends in our business, strong growth for all 3 of our business areas to continue as such. There's no change in the underlying trajectory. Prosthetics, I think I've mentioned most of the highlights here for the quarter. Strong 14% growth year to date. We look at bracing, we're at 4% year to date. And then we look at patient care, where we're at 7% year to date. So, and this is our guidance for the year, and we have not done any changes after the Q3 reporting. We expect to grow organic at the 7 to 8%. We expect to be in the middle of our EBITDA guidance range, and other parameters are stable and consistent with historical levels.
And let's just touch upon it while you're at the guidance, and then we can go to the general, because compared to the first 9 months and even Q3, the bottom of the guidance range of growth seemed very low. Have you seen something in the quarter that makes you less optimistic going into Q4?
No, not really. We have not seen anything which makes us no fundamental change as such. So we are rather sort of cautiously optimistic around as we look forward.
So it's partly we should remember the strong comparison base.
Yeah, exactly. We had a good Q4 last year. Yeah.
And I also did I hear you indicate or write somewhere that the middle of the guidance range was maybe more what you should be looking at, or
On EBITDA margin, yes. EBITDA margin, yeah.
Okay, so then it doesn't look that that's perfect. Yeah, but I think that was the question regarding the guidance.
Yeah.
Should we go to? I don't know whether we have any other comments, or should we just jump into the Q&A?
Let's just go to the Q&A.
Yeah. Then there's a question: how is your business affected by the increasing number of conflicts in the world? I'm afraid we can't go around that, and also looking at your product portfolio and then seeing the terrible pictures all around the world. So any feel on how that affects your business, positive or negative? I know it's not nice to talk about, but
no, but let's say the majority of amputations every year are related to diabetes or vascular complications in the lower part of the body. However, most of the patients that we serve have lost their leg due to accidents or other reasons, because life expectancy is unfortunately lower for the dysvascular amputees. So yes, there is the situation both in the Middle East and in Ukraine is complicated, and Össur is at least in Ukraine we've done a lot to sort of do what is possible there for the time being, both donating product but mostly educating prosthetists such that they can serve a very big population of amputees. I will though say that this is not going to change our overall prospects as a business and have some major impact on our future growth prospects or anything like that. But it's still a responsibility for us to do what we can to support and help create a setup that will serve all of these amputees going forward.
So there's a question: are you involved in any programs helping Ukrainians who have lost limbs in the war? So I think you gave the answer that you are is that correctly understood, that you're educating people down there to take care of that?
Yeah, so both. I mean, we have donated quite a bit of product, but when it comes to helping individuals that have lost their leg, it's a lot about what is needed is the specialist attention, where you have an educated prosthetist that can build a leg, because there's always a customized part to each and every individual that needs to be customized. So that is the biggest challenge at the moment in Ukraine is lack of let's say qualified. There's lots of good prosthetists, but the volume and the problem is so big that you need many more, and then there needs to be a payment system that somehow maintains all of these legs going forward, and these are all topics that we have done our utmost to support in this regard in a very complex situation.
You mentioned also the cardiovascular, and I guess maybe you have already gotten it, but you know, with the better diabetes treatment and you know, the revolution that everybody's talking about. So I think companies are asked right now, how will your future be affected if you might say the diabetes treatment and the obesity treatment really takes off? Have you made any thoughts of that, or have you made any projection of that, which I know is probably impossible at this early stage, but yeah, some thoughts and about that?
Well, first of all, it's just great news that there is progress around preventing, let's say, the high prevalence of type 2 diabetes. And if we look back over the last decades, there has been constant improvement in prevention, let's say, and better diabetic care, which every year results in fewer diabetic-related amputations. But again, even in the Western world, in the well-funded, mature healthcare systems, only a very small part of those patients actually get a prosthetic leg, which has been one of the things that we've been fighting against, because there's been a perception that these individuals are usually too weak to be able to use a prosthetic leg, amongst other things. So the fitting rates are very low already today. And most of the population that we serve have lost their leg because of other reasons. But this will, of course, over time, as with many other technologies in the past, lead to fewer diabetic amputations, which is just great news. And our task in prosthetics is to get more of the existing population using better devices, more higher quality devices. And there is still a lot of work to do around that.
And just to get a feel of it, I know it's a little bit general question, not a Q3 question. How much higher is the margin on your bionic knees on this part? I know it's maybe hard to say because there's also more service going with it, but how much higher is the margins when you go up in technology?
Well, generally, you could say that they're somewhat higher than the average margins that we report as such. However, it's also important to remember that there is a very intensive sales approach, intensive service approach, and we've made a lot of those investments already, if you will, in most of our well-developed markets that do pay for bionics. So as the utilization increases, all else equal, we should not have to make proportional investments in sales and marketing infrastructure. So what I'm saying that we have some scalability there as these products are used in a broader context.
And then there's also, is there any product launches in the coming periods that we should look out for, and maybe that could lift your growth? That's always what we look out for. Any major product launches, I think, or is it more like generation to generation? So it's not like it's what do we call it, the game changer?
No, I mean, Össur has historically not been about game changers, but we continue to make significant investment in developing our bionics platform. We launched the first really commercially viable version of our power knee last year, which was a major milestone for us, being first to market with a powered prosthesis where you actually get some muscle power as well. And this product line is delivering a good growth this year. Then we've also communicated that we have a next generation of our Rio knee, which is our biggest product in bionics, being launched here in the beginning of next year. So all of this helps us maintain healthy organic growth rates, but it's not a sort of a blockbuster thing and make or break as such, just to be clear around that. But yes, we have a good pipeline around our innovation.
Perfect. And then there's a question: who are your biggest competitors, and do you expect to grow more than them in the future? So a little bit of touch upon who's your biggest competitors, and whether in your long-term or your 27 ambition that is put in that you will grow faster than them, i.e. taking market share.
Yeah. If we look at our three main business areas, in prosthetics, our main competitor is a German company called Ottobock, a very strong company with great products and a great infrastructure globally. We estimate that they have a market share around 35 to 40%, while our market share is around 24% in prosthetics. And then the rest of the field are somewhat smaller players and with both a narrower product scope and a narrower geographic presence. We believe that we have, if we look over the last 10 years, gradually taking market share in prosthetics. And we believe that both through our benefits of scale around our infrastructure, our investment in innovation, and also the fact that we are now vertically integrated, which supports our product business as well, we should be well positioned to continue to gradually grow share. But I think most importantly, is we are in markets where we have structurally the demand in the private pay emerging markets is there. But it's about finding ways to effectively capture that demand. And then in the more developed markets, it is about getting more people to use better mobility devices. That is first and foremost our task in this industry. But we will always fight for market share, of course. But at the end of the day, it's about going after these big opportunities. Then in bracing, it's much more fragmented, and in patient care, it's even more fragmented. The competitive landscape.
Yeah. And then there's a question: can you tell about the ownership structure of Össur? Who is your owners, and who are the big investors in Össur?
Yeah, Demand Invest, or the Oticon Foundation, which I think it's sometimes referred to in Denmark, is our biggest shareholder. They've been invested in the company since 2004. They own over 50% and have said that they claimed, it's their ambition to have an ownership stake somewhere between 50 and 60%. And then we have a few large institutional investors, and then a large group of the traditional healthcare investors, and a sizable group of private investors.
Perfect. And then there's a question regarding your bracing, the 1% growth. Is that where you could see the impact of maybe consumer behavior, consumer confidence, the lower economic growth? So a little bit thinking on how recession-proof are you, and is it maybe in the bracing category, which shows a little bit slow growth in this quarter, that something there should show up, or is it just us overthinking the lower growth in one quarter and shouldn't overthink one quarter's growth?
No, it's certainly below our expectations here in quarter 3. Year to date, we're at 4% growth, which is all else equal. We will do well to grow 3 to 4% in bracing. But remember, we're not in the private pay market in bracing. We're not selling bracing in retail outlets. We only play in the reimbursed, let's call it medical part of the bracing market. And again, these are fundamental products in each and every healthcare system. And so that we again, it like what we did see in COVID, activity levels went down. People were not exercising or not doing the same things they used to do in many cases, which meant that there were fewer injuries, which impacted our bracing business. But now with activity levels up, elective surgeries are back to where they used to be. The unit demand for bracing is again healthy.
So in total, you are very little exposed to, you might say, the general consumer confidence and the ability to pay or purchase something. Is that correct?
Yes, to some extent, because again, it's the reimbursement side, and when people need our products, they usually don't want them. It's because you need them.
I know.
That's just the way it is.
Perfect. I think we got through all the questions, and there's someone congratulating on your company and the things you're doing out there. So you can take that with. I think that's a perfect ending. Thank you to you, Sven, for taking us through your results, a little bit of the presentation of the company, and answering questions. And thank you for the audience for listening in and getting some good questions in.
Thank you very much. I really appreciate the opportunity, and have a nice day.